welcome again to this first session of the 2026 Global Institute of Credit Professionals Annual Conference. I'm Kevin Boyle. I'm head of the Asset and Wealth Management faculty here at Fitch Learning. Unfortunately, I'm not alone. We have a great panelist with us whom I'll introduce in a moment. While the focus of the conference this year is private credit, as with all aspects of financial markets, we know that clients are keen to understand the impacts, the risks, and the challenges of artificial intelligence. So that's the focus of this particular kickoff session. Unfortunately, we have expert panelist Michael Burns with us. Michael's head of artificial intelligence at the Eclipse Foundation, who I'll gently interrogate before we open up to broader questions. So please do use the question and answer tab to note any of your questions, which we'll address later on. Michael, I understand that after 2 decades in fintech and 13 years implementing AI solutions for some of the world's largest financial institutions, you recently made the decision to join the Eclipse Foundation as head of AI earlier this year. Now, before we get into your journey, and I'm interested to know more, I'd like to set the scene for today's session. We've lived through quite a rapid expansion and evolution in AI, from the early days of machine learning through the explosive explosion of generative AI, and now into the era of agentic AI, where systems are increasingly acting and making decisions autonomously. At each stage, the stakes have grown higher, and so is the question of who controls the technology. And that brings us to the theme at the heart of this particular session, a case for open source AI. Michael, with all of that experience across these waves of AI development, why is open source AI where you're planting your flag right now?
Thank you very much, Kevin. It's a pleasure to be here and to contribute. From my perspective, I've, as you said, I spent more than a decade building AI in these walled gardens, you could say, at PwC, a number of AI startups. And as you said, on the banking side, the asset management side, and regulators. And every time when we build something transformative, disruptive, given my time in fintech as well, the value that accrued in the platform, not necessarily the institutions we build it for. So you could say in terms that the bank paid for the innovation, but the vendor owned the leverage. So after I saw the cycle repeat over and over, before that in fintech and regtech, I realized that the only way to break it is to change the ownership of the model entirely. So for me personally, and I've observed that for a long time, open source AI isn't a technology choice, it's a power rebalancing. The question isn't so much about why I'm planting my flag here. The question is more, at least from my perspective, why the financial services industry hasn't planted their flag more into this yet, given where the world is going with more dynamics and more uncertainty. And personally, I enjoy having more purpose in life. That means I enjoy contributing to the democratization of data, of models and AI use globally. And that's what I'm at Eclipse Foundation to change.
Michael, thanks for that. So your key points are really, well, one, in terms of open source AI, there is a strong argument for the whole infrastructure, the whole of the financial services sector and perhaps beyond to be engaged with this. And we'll come on to that. But secondly, it's also good for your work-life balance. And that's a very good reason. I'm sure all of us appreciate that as well. On that point, let's take the views of our audience. The question here is, which best describes your organization's current relationship with generative AI? I can see some of you are already responding. Most common response there, 42% gone for the GPT default, which I think chimes in with a lot of what we see at Fitch Learning, and our clients are right across the financial scope. What are your views on the responses from our audience there?
It's an interesting mix. I mean, I did expect that we would see the majority of in the first category. But personally, of course, I like that we even see 12%, but of course, over time growing in the sovereign path. And then some people are still watching the things unfold. And I'm based in Germany. What I see also in this market is that while banks have, of course, built their capabilities on some of the latest things, be it agentic AI and so on, it's a time for others to test and the banking landscape here to watch. But when we think about the first option. I mean, you are not alone, but just because that's the current majority doesn't mean it might be the right position given any kind of circumstances. I guess the banks did this in a way before the financial crisis too, in terms of using the credit models and so on. So that alone doesn't give it the right to be predictable into the future. So this might be comfortable today, but I guess comfort and resilience is not always the same thing when it comes to pricing, changes in the market, and so on. So the industry, from my perspective, and I haven't got a global view on this, more maybe a European one based on discussions with regulators and participants in Europe. The industry is in some way still in a state of outsource first and then ask questions later. But the landscape is changing. We're seeing the introduction of EU AI Act and similar rules in UK and elsewhere. So this not answering questions is just a kicking down the can down the road for a later test, if you could say.
That makes sense, particularly given the lack of insight at the moment. We simply don't know enough. Again, if I just share the experience I've seen, I actually see quite a lot of the hybrid approach. So the use of proprietary models, but a lot of testing of open source. So let's push on with this. Let's just dive a little deeper into some of the reasons perhaps that firms are, and the respondents to the poll we've just had there are not going for the hybrid approach. Maybe something to do with the sensitivity. So let's move to a key topic for all of us, which is proprietary safety. For those of you old enough, maybe you've got the challenge of are you buying Betamax and VHS? That's my age. For those of you much younger, hopefully most of you on this, are you buying a hydrogen cell, electric car, or hybrid? That's the challenge. So in the context of AI, how do you, Michael, consider the relative merits of having your own proprietary walled garden AI solutions versus possible long-term structural risks?
Thank you, Kevin. I mean, first off, I'm definitely in the electric car category, and I'm happy to report that apparently the MG was British designed but Chinese made. But that is a separate topic to this discussion. So, from my view, in terms of the safety aspect, maybe that is a bit out there, but given that I have an open source background now, I would say that vendor login is the new subprime, right? Back in 2008, we had a concentration of risk and we had some opaque instruments, and the subsequent events is clear to everyone. But in a way, if you're just depending on one single vendor or the API of that vendor, that is a systemic risk hiding in plain sight. So when somebody else controls your models, your data pipeline, and your pricing, you could say you don't really have a technology strategy, but you have a dependency, at least when the regulator comes in or questions are being asked about this, right? And then, as we've seen, even in the Iran war, the kill switch is not hypothetical. What I mean is that if you followed some of the attacks, we've seen attacks on data centers where people take a view that this is critical infrastructure to conduct wars and other things, and so they're attacking it and taking it out. So with one sudden switch, then if other things depended, your credit risk engine or your AML pipeline. So if that is dependent on a model that gets sunset next quarter, what's really your continuity plan on this, right? And I'm of course working for the Eclipse Foundation, so we've got a view on this. But if you actually get involved and you start building up your own capabilities and skills on your own side, you get a margin of safety in terms of a more independence. And you could say that, you know, in these 13 years that I've been working on solutions in that space, the most resilient architectures were always the ones with optionality. That means open source gives you the ability to fork, to migrate, to self-host, and that is risk management for me, right? I had my 10 years in risk management in the fintech times, and then build AI use cases on top of that. But open source is that margin of safety that sometimes you need. And something that you've probably seen if you switched vendors, we're seeing a token inflation, and in some ways you're paying for that. So that means your operational costs are tethered to somebody else's revenue targets. And if you're building things yourself, or at least have a skilled team that can benchmark different models and decide which ones to take, then you decouple from this in a way. And then last but not least, but on the Betamax, I guess I was around, but maybe not fully switched on it back then. But proprietary AIs, in my view, of course, Betamax, technically polished, tightly controlled, and ultimately eclipsed by the ecosystem that chose openness. So in the end, the VHS won because the ecosystem could build on it, other people could deliver it. And maybe open source AI will follow the same structural logic. Maybe.
You raised a lot of points there. And again, just reflecting back on what you've just said, Michael, I was there in 2008. I knew exactly where I was when events started happening. It was very close to Lehman's when it fell apart. And the points you're making resonate. It was the lack of transparency. It was probably one of the key drivers of the challenges that we had, the global financial crisis, and the resolution, as the credit rating agencies, including Fitch, have seen, is greater transparency. And that's something I'm sure colleagues will pick up on the later sessions today.
I remember those days. It was I was at Morgan Stanley at the time. I had just joined them in March that year, and we were very proud that our Monte Carlo VAR simulations were more accurate, or that we could run 100,000 and create a number in the box. But as things unfolded and the correlation was one, unfortunately, that more accurate number that our quants had given us didn't really change the fate for us in any different shape or form than the other investment banks that were equally under pressure, right?
So we're learning from history, hopefully, Michael. Let's continue this a little further. Many of the audience I know work for regulators, and if they're not, they're in a regulated role, as indeed my colleagues at Fitch Ratings are. To date, some users of AI have just accepted the challenges of hallucination and IP because of the benefits that come. That's obviously not good enough for a highly regulated environment, indeed for any organization which wants to plan for a sustainable future. So what are your views on how we can manage this aspect of AI risk?
Yeah, that's an interesting one. And I have to say that, even my early work in AI, the regulators were really interested. So I had a chance to work directly with Bank of England, FCA, AMF in France, SFC in Hong Kong, Singapore MAS, ECB, and many others. And it was because the solution that we worked on back then was RegTech, but it was just that due to Singapore and this conference happening, there was an awareness of subtech, so that the regulators will start using the RegTech technologies that we build for the banks to then look at things differently. But in terms of my response to that question, I think you would all agree with me that trust me is not really a regulatory strategy. So when it came to some of my work in financial services, every material decision must be explainable, auditable, and defensible. And I've sat across the regulator on behalf of some of my clients in my early years to explain some of the models we are building. And initially, the regulator might not have had a big team of data scientists, and I had to be careful how I phrased it and careful which models to use and so on. But eventually, this discussion moved on from you are providing a black box and we can't see the results, we don't understand the different layers in your neural network, to, oh, we can see that AI in this case can show the bank 5 times more things to investigate, while at the same time reducing noise by 90%. And that is at that point not possible anymore with a rule-based kind of solution. But yeah, the provider or the discussions have moved on from how does this model work to the answer shouldn't be it's proprietary. I think if that is your answer, then you have a compliance problem, not really a technology solution that you build yourself or that you can explain. And I think where open source can help you is maybe not to fully turn that black box into a glass box, but your team in risk in other areas could inspect every layer. That means from the training data that goes in to the model provenance, to the weights, and to inference logic, right? And we could have a whole session just on what is open source and how do we define it in large language models, but that's for another meeting. So when you talk about regulated firms, it's not just a nice to have, it's a baseline for deploying AI in production to have that kind of transparency and explainable AI. And you've all seen it if you used any of the solutions we had on the last poll. Hallucination is a engineering problem in a way, not a philosophical one. That means the way the architecture was built initially, where it predicts something or the next word based on the remaining sentence, in terms of this forward prediction, you will have hallucination happening. But if you build the model yourself, or if you're using one where the weights and everything is transparent, then the retrieval augmented generation, the grounding, the constrained outputs, the guardrails, that is something that you can apply if you can see the model internals. If the model is closed, then you can kind of try to work with those elements in terms of guarding the output, but you will probably still have quite a high hallucination rate and so on. And in terms of the audit trail, I mean, code provenance, and this provides this, and you will have more chances to answer the questions. And I mean, I've just come back from a visit in the UK for the FCA supercharged AI sandbox, and I feel that the regulator will start asking more and more questions in terms of show me, not tell me. So that means that not just in Germany, but elsewhere in Europe and elsewhere around the world, you will have to produce the lineage of the model decision at a certain time. And if you build elements of this yourself or in collaboration with others before layering your own IP, I think you will be in a much better position to answer those questions. So you could say it creates some accountability at scale, and you are in a way more the master of your own fate, at least when it comes to the AI deployments and solutions.
We're beginning to also get questions in specifically on some of the points you've just mentioned, the AI risks. But I will share one point. We work with regulators, obviously, and we are seeing, well, in my opinion, not Fitch, okay, in my opinion, we're seeing them more on the front foot. I come from a background in audit many years ago, and the regulators seem far more on the front foot with respect to this area than perhaps other, new developments in technology that we've seen in the last 20, 30 years. So I'd share your points there. Just very briefly, Michael, on another key challenge entities face is the protection of IP and possibly incorrect use of another entity's IP. So how can the audience best manage IP integrity and, where relevant, protect their own and create the legal moat, that corporate strategists and investment bankers are now highlighting, and that many people in PE who I'm familiar with are very concerned about at the moment?
As we've seen, some of the geopolitical fallout or developments might impact of what I'm going to say here, but at least in my opinion, the AI Wild West in terms of IP and using things will end, and it will end badly for the unprepared. So most organizations are training or fine-tuning models with no IP provenance, and as you've probably seen in the press, there is still quite a number of lawsuits out there, and I feel they will mature and eventually. So then the question will not just be, did you innovate, but can you prove that you didn't infringe on somebody else's rights? And let's say you can protect yourself against it if you're more aware of what you're using, or you build it yourself, or you have more transparency on this. And on the open source side, we use a system called Open Chain, which is like you could call it a legal hygiene framework where each of the components is proven, and you can use the Apache or MIT licenses that would give too deeply, but to ensure that the components of your own system is not infringing on somebody else. And yeah, your AI supply chain in a way is as vulnerable as your software supply chain. So some of you have spent years securing your software bill of materials. So the AI stack that you're using deserves the same rigor in a way to take that on.
We want to hear from the audience again. So, yeah, we'll get to the second poll. And this one looks at the most significant concern you've got regarding closed AI models within your current risk framework. Getting some rapid responses here. One of the answers is not getting many responses, and I suspect that's because of recency bias. That may change in the future. So again, Michael, first option there is the most common, 43%. So data sovereignty, losing control over where intellectual property resides and how it's utilized. So that's the most significant risk. I suppose that chimes in with some of the points you've mentioned already.
The data sovereignty one, of course, that should really terrify every board member in the room in terms of losing control of your data and the client's data and the processes. But when we come to the unpredictable costs, I mean, I mentioned that earlier, the topic of token inflation in terms of pricing models changing overnight, dependencies, and so on. But it seems to be a minor concern here. But the kill switch here with 22%, I mean, that's a existential one. I'm glad it's people are aware. So any single vendor can depreciate your model or pivot to a different one, whether you like it or not. And therefore, in financial services, we got to stress test these dependencies. And then from the regulatory blindness, I can sympathize in terms of there's been a lot of changes in dynamics in terms of when we look at US, where the regime changed the AI papers previously published and then taking it back. But in terms of the compliance officer probably awake at night in terms of their implementing the EU AI Act, where it requires explicitly the explainability of high-risk AI systems. So a lot of the major decision system will be in that category, and if you can't explain it, you cannot legally deploy it. So that is a full stop, and therefore I understand why, in terms of that blindness, that is the second biggest category here.
I suspect if we had a more sophisticated poll, and we'd asked people to rank these. I wonder if it would have come up in the same order, actually. But that's something we can leave to the next time we meet on this. I want to turn now just to the last couple of minutes that we've got, Michael, some of the questions we've had from the audience. I'll start off with one which actually picks up on very specifically on AI risks.
Mm-hmm.
So we seem very focused on AI risks like hallucinations, but in finance, we've long relied on models like VAR built on Gaussian assumptions that tend to underestimate extreme events. And the question really is there a danger that AI becomes the fashionable risk and actually we're less attentive to other types of tail risk that could really hurt us, as we're seeing now, I suppose, geopolitical risk?
Yeah, I think we are seeing a mixture of this, but I mean, maybe I should say, first of all, I sympathize with the question. I spent a lot of my early career in risk management, building accurate risk models with Monte Carlo VAR, historical VAR, and so on for financial crisis occur and then them being taken apart. But I also spent some time after the financial crisis in liquidity risk management in introducing a new regime. So in terms of fashionable risk, I mean, I don't see, let's say, a Basel 5 or a future version that is focused on AI, but I see a concentration risk in terms of vendors, in terms of systematic risk. I see dependency on AI infrastructure and data centers. And as we've seen in the Iran war, this infrastructure and the dependency then becomes very much the forefront. And if you remember some of the discussions in terms of the Department of War, in terms of Anthropic, for example, so it's very hard to say AI doesn't play a role in world politics, and it's very hard to say that there isn't a systemic risk being built up due to this. And of course, when we talk about the topic that we have in mind for today in terms of private debt, you could have a whole separate session just on the large language model producers and going into private debt and taking the world to a different place in terms of valuations and the money raising and so on, right? So it's a very interesting question, but it's not like a quick short answer that you can give. I think AI and the fact that you should get to more transparency on that should definitely still be on every risk manager's radar. Maybe sometimes, I blame the hype on Gen AI and agentic AI. AI drowns out any other noise, and that shouldn't be the case. But you should watch it, maybe not so much from the hype, but more from a governance and control perspective.
I'm reminded of Donald Rumsfeld's words. I think we know a little bit about the known knowns and we know the known unknowns, but if anyone on this session can give me an insight on the unknown unknowns, please get in touch directly afterwards. We've got a question related to governance. So I just want to ask you a very specific question, and then we can open out on that. With the EU AI Act and Cyber Resilience Act defining the new boundaries of legal innovation, compliance is now obviously a strategic differentiator. That's the view you'll read some places. What are your views on that, Michael?
I mean, I spent a lot of my career in RegTech, and therefore, I guess I'm not telling you something new. Compliance is no longer a cost center; it's a competitive weapon. And for many reasons, maybe 13 years ago when I started my journey in AI, it was the banks that had a anti-financial crime, anti-money laundering issue that they couldn't solve with current systems, and they came to us back then. But this means that when we take the EU AI Act as a burden, we will be outpaced by those who treat it maybe as a mode in terms of if you are compliant before your competitors, you launch products faster, you win mandate, you set the benchmark. That's not just maybe regulation and that strategy. And in my heart, I'm born in Germany, I'm European, and there's many things I would have changed in the EU AI Act. but it's also a differentiating factor in a way. And when we talk about the Cyber Resilience Act as well, that for me at least, and I'm not the full down expert on it, but there is a big crossover in terms of AI. It changes everything for the AI supply chain. So the CRA extends software liability to AI component. So if there is a vulnerability in your AI stack that can cause harm, the producer is liable. But in a proprietary model, that's your vendor who will point to their terms of service, their SLAs, and so on. But if you build things yourself, maybe with proper governance, liability is managed through a transparent, auditable process. So you could get to a compliant by design set instead of one that is retrofitted around what you have, right?
So just following on, we'll pick up a question. How will democratization via open source AI affect practical issues around governance, which may need some form of proprietary customization?
I feel that the governance that you will get is around, let's say, the foundations or the baseline. That means that many different companies, maybe together with your competitors, will build the same underlying foundation that you can then have a lot of transparency and a lot of safety, a lot of reviews, and that is actually good for you. But you build your IP, your data, your models, and everything on top, or how you use the models, which ones you use, in which use cases you engage. That is kind of like your secret sauce. But if you have that kind of setup, then from a governance perspective, you've gained more control, more insight than you had before, because you're not depending on a single firm. You're building your own thing. You're building in-house expertise. You're building in-house expertise, not in terms of just data science, but also people who can review those models from a risk perspective and from a CRA perspective.
Okay,
So,
Michael, I'm going to have to stop you there. I know we could both go on for some time. We got other speakers after us. So just want to thank Michael Burns, Head of Artificial Intelligence at Eclipse Foundation. Myself, Kevin Boyle, Fitch Learning. If you do have any further questions, opinions, do get in touch. We hope you enjoy the rest of the conference and good luck.
thank you very much, Kevin.
Thank you, Michael.